33% rise in capital expenditure plus some income tax reliefs for several slabs. Those are the standout features of Finance Minister Nirmala Sitharaman's last full budget before the elections next year. Despite this, she sticks to her fiscal glide path even as she unveils a bunch of measures for rural India. The Finance Minister estimates a realistic tax and GDP growth of just 10.5% in FY24. Reiterates she will continue on the path of fiscal prudence and bring deficit down from 6.4% to 5.9% in FY24 and further to below 4.5% by FY26. Pegs FY24 gross government borrowing at 15.43 lakh crores. Bond markets rejoice with yields falling over 10 basis points. The middle class gets some tax relief in the budget, but only under the new tax regime. Finance Minister Nirmala Sitharaman prunes the number of income tax slabs to 5 from the earlier 6, hikes exemption limit under the new regime to 3 lakh rupees and increases threshold for tax rebates to cover annual incomes of 7 lakh rupees from the earlier 5 lakh rupees. Also cuts the highest surcharge rate to 25%. Estimates the government will forego around 38,000 crore rupees in tax receipts. Wild swings on Dalal Street as stock markets wipe out early gains in late trade. Adani Group stocks plunge in trade, wiping out nearly 2 lakh crore rupees in market capitalization just today. More than 7.5 lakh crore rupees wiped out since the Hindenburg report raised red flags last week. Finance Minister says the government will continue building on its capex plans, hikes its FY24 capital investment target to 10 lakh crore rupees and pegs the centre's effective capex at 13.7 lakh crore rupees. That's 4.5% of GDP. Budget 2023 continues with the government's agenda of plugging tax arbitrage options in insurance. Proposes taxing payouts received from life insurance policies issued after April 2023 if the total life insurance premium paid in a year exceeds 5 lakh rupees. Government clarifies that tax exemption on money received by beneficiaries on the death of the insured will not be affected. Life insurance stocks come under pressure. Government extends free food scheme for another year, says it will bear the entire cost of 20,000 crore rupees, but budget whittles down the subsidy bill by 28% from 5.2 lakh crore this year to 3.74 lakh crore rupees next year. Fuel subsidy has been cut by 75% and fertilizer subsidy by 22%. The budget points to falling demand for the government's flagship rural employment generation scheme. Allocation towards Manrega is cut by 33% to 60,000 crores. But the government says it spent over 89,000 crores on the scheme in FY23 against a budgeted 73,000 crores. Government trims its divestment target from this year to 50,000 crore rupees from the year earlier budgeted. Target of 65,000 crore rupees sets a modest target of 51,000 crore rupees for the coming year.
Honorable Speaker, I present the budget for 2023-2024. The fiscal deficit is estimated to be 5.9% of the GDP. I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all.
नया बजट आपके सामने है। नए संकल्पों को लेकर के चल पड़े। 2047 में समृद्ध भारत, समर्थ भारत, हर प्रकार से संपन्न भारत हम बना के रहेंगे।
टैक्सेस बढ़ गए हैं, जो वेलफेयर स्कीम्स हैं जिसपे ये पैसा खर्च होना चाहिए था, सब्सिडीज पे जो पैसा खर्च होना था वो उस पे पैसा खर्च नहीं हो रहा है.
There was no mention of Manrega. What are we going to do about the poor rural labor? There was no mention of unemployment. There was no mention of inflation.
It's not only an economically power-packed budget, but it's also a humane budget.
टैक्स रिबेट वगैरह ये केवल जो है आंखों में धूल झोंकने के बराबर है.
capex, consumption and credit. It is being dubbed as the Triple C budget. Let me run you through what Finance Minister Nirmala Sitharaman has delivered. The big headline numbers. She's largely stayed away from populism, which was the expectation or the fear, given that this is the last full budget of the government ahead of the 24 general elections. What Nirmala Sitharaman has done is walk the path on fiscal consolidation. Of course, she has promised a 33% higher allocation as far as public spending is concerned. Capex, that has been the big story, and the government continues to do the heavy lifting there. There's also been some relief that's come in for taxpayers, but only if you move to the new tax regime, and the government hopes that with what it's put on the table, that shift will finally happen. Sum and substance, positive response from the market, positive response from industry, positive response from rating agencies as well. That's how Budget 2023 has been summarized. Here are budget editors with their take on Budget 23, the impact and the implications.
The budget adopts the following 7 priorities. They complement each other and act as the Saptarishi guiding us through the Amritkal. Inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and financial sector. The capital investment outlay is being increased steeply for the 3rd year in a row by 33% to 10 lakh crores, which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20. The fiscal deficit is estimated to be 5.9% of the GDP. In my budget speech for 21-22, I had announced that we plan to continue the path of fiscal consolidation, reaching a fiscal deficit of below 4.5% by 2025-26, with a fairly steady decline over the period. We have adhered to this path. To finance the fiscal deficit in 2023-24, the net market borrowings from dated securities are estimated at 11.8 lakh crores. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 15.43 lakh crores of rupees.
I think she's over-delivered on the personal income tax, which is a very good thing, and this was something that was expected by the people, and people were asking for it. So we will have to read the fine print, but I think the maths must have been done. And I remember while she was speaking, she said up to 7 lakhs there'll be no taxation. So if that happens and the tax rates are what they are, and obviously this will be without any exemptions being given to the taxpayers, I think a lot of people, and she also gave some examples, and I'm sure the department must have done their arithmetic where you see at this income what were you paying in the old tax regime and what do you pay in the new tax regime, and she gave 2 examples. If all that is what is contained in the scheme, I think we'll see as many number of people now shifting to the new tax regime as were giving in the old tax regime in the olden days.
I don't think there is need to tinker anymore with tax at this point of time. I mean, you're already doing well, you're collecting well. You should lower, you should increase the limits. You should actually put more money in the hands of the common man. And honestly, on the capital gains tax side, if you want to do anything, just collide and collapse. Make 1 year as the single 12-month period to determine listed, unlisted capital gains. Don't tinker with it anymore. The market is in decent shape at this point of time. It's been bruised a little over the last few days, but I think it's coming up nicely.
Remember, the finance minister actually promised that in the next 2 years, the deficit will be down to below 4.5%. That sets us up for pretty meaningful consolidation the next 2 years. So they're on that fiscal glide path. There were no unpleasant surprises to the bond market. Both the net borrowing number and the gross borrowing number were within expectations. For me, the main issue was going to be on what the tax buoyancy is, and the early read is that the tax buoyancy seems reasonable.
I think it was very nice to see the focus on tourism and the whole idea of developing 50 model areas where tourism can be developed, because it has got tremendous economic multipliers. Whole ecosystem will create a lot of small and private entrepreneurs besides, the infrastructure-oriented projects. So that's I think, a very welcome development. Sharper focus on bringing technology into agriculture. So the support to agri-tech, agri-entrepreneurs, and developing the public digital infrastructure for agriculture. I think that's a terrific move.
Actually, from a macroeconomic standpoint, economists are willing to give this budget a AAA. And I'll tell you why. The first A is for the fact that the fiscal deficit is being brought down to below 6%, 5.9 versus 6.4 for the current year. Economists would have been a little happier with 5.8, but 5.9 is good. And the second A is for the fact that these are based on realistic assumptions. You have the nominal GDP projected at 10.5%. The street is standing at 10%. And tax growth, gross taxes are also expected to grow by 10.5%. That is realistic. Taxes grow as fast as the economy grows. That's a tax buoyancy of 1x, which is very realistic. And the third is for the fact that there is a gigantic leap in terms of capital expenditure, 33% rise to 10 lakh crore. And the two heads on which they are being spent, railways getting 2.4 lakh crore, very sensible, improves productivity. And the other big vertical is urban infrastructure. In fact, like we have the RIDF, Rural Infrastructure Development Fund, a UIDF, Urban Infrastructure Development Fund is going to be created. And this is exactly where urban, migration is happening from rural to urban. As well, it's urban infrastructure creates a lot of jobs. So that merits a AAA, and that's why you saw the bond markets cheering. The borrowing program is only coming in at 15.4 lakh crore. The market was prepared for just that. So jubilation in the bond market. Should I raise red flags? Maybe one red flag, if you please, would be that even this 15.4 borrowing could get difficult if insurance companies don't buy. In the current year, insurance companies have bought 2 lakh crore of bonds because they sold guaranteed products. In FY24, insurance companies are belaboring under extra taxes. So maybe they will not buy so much. That's a possibility. Then the borrowing program can get tough. The second red flag, if you please, is can the government find enough projects to spend 10 lakh crore? Even this year, they have pruned it from 7.5 lakh crore to 7.3 lakh crore. Delivering on 10 lakh crore could be a tall ask, but it's not impossible at all. I think you will have to give the budget a AAA.
Well, speaking of capex, one of the big headline numbers that came in was for railway capex at 2.4 lakh crore rupees, the highest ever allocation for railways. In an exclusive conversation with me, the Railway Minister Ashwini Vaishnav believes that the next 2 years will prove to be a game changer, a turning point for the Indian Railways. He also said that the government is looking up at setting up 3 new manufacturing plants to manufacture the Vande Bharat trains. The first hydrogen train should be launched by the end of the year. And in terms of the railways operating ratios, Ashwini Vaishnav saying the railways have achieved break-even, so their revenues can support their OPEX, but CAPEX not just yet. But listen in to what the minister had to say on the roadmap for India's railways.
So with increased market share and adding close to about 300 million tons in the last 8 years as additional traffic, additional cargo, this has helped railway break even, and we are today able to meet all our expenses from the revenue which is earned out of railway. So for CAPEX, yes, we are dependent upon the government budget. For OPEX, practically we are able to meet the entire expenditure. So that is where we stand. The coming 2 years will be really turning points for railway, because, and this year by December, we should be able to roll out the first hydrogen train, and then we will manufacture using that technology for all the heritage circuits.
Well, the expectation was that this budget would do something for the salaried class, for the middle class, and it has delivered on that. But only if you move to the new tax regime, where the tax slabs have been pruned and other changes have been made, including to the highest tax bracket. Surbhi is standing by with what the new personal income tax regime means and whether we are likely to see people switch from the old regime and move to this new exemptionless regime. Take a look.
Let's quickly run you through the major tax announcements that will impact your savings, investments, your take-home salary and more. The biggest one of them, of course, being the concessions that are now being offered in the new tax regime, basically the sweeteners that have been thrown in, and this regime is now the default tax regime, which means that you have to explicitly go to your CA if you want to be in the old tax regime. So what are these sweeteners? Let's start with the slabs to begin with. We've got 6 slabs now at the income level. Up to 3 lakhs, no tax. 3 to 6, 5 lakhs, 5%. 6 to 9 lakhs, 10%. And we flip this over, come to the next one, 9 to 12 lakhs, 15%. 12 to 15 lakhs, 20%. And this is the one to remember. 30% tax is kicking in for income above 15 lakhs, unlike the old regime where 30% kicked in or still kicks in for income above 10 lakh rupees. The big one, the rebate in the new regime has been hiked from 5 lakhs to 7 lakhs, which effectively means no tax liability for income up to 7 lakh rupees. So that's the good one. Let's now talk about some of the other sweeteners, and standard deduction is a big one. Now it is available in the new tax regime. You still don't have ATC or ATD, those are the popular deductions, but standard deduction of 50,000 will be available. Also, there's an amount of about 15,000 rupees. This is family pension, which will also be available, this deduction, in the new tax regime. So that's as far as the deductions are concerned. Now let's look at the surcharges, where the high earners have reason to cheer. For them, a lot of experts say it will probably make sense to move to the new regime. And here's why. Because this peak surcharge rate of 37% has been cut down to 25%. Let's tell you how this will work. What this basically means is that anyone who's earning income of 2 crores or higher will now pay a surcharge of just 25%. Earlier, this rate was going up to 37% for those who were earning more than 5 crores. So effectively, the maximum marginal tax rate is coming down from 43% to about 39%. So that's good news on the surcharge front. Here's the table. 25% is the maximum surcharge right now. Let's move on and look at some of the other provisions that were announced today. Property. If you sell a house or a residential property or any property for that matter, capital gains arise out of that. You can reinvest the proceeds to get some tax relief on those capital gains. You can reinvest it in another property. That relief has now been capped at 10 crores. Gains above this amount will attract tax. So that's something to keep in mind. Last but not the least, the most contentious aspect of this budget from a personal finance and wealth perspective is really insurance. What the budget says is that life insurance policies, not term insurance, not ULIPs, but all the other life insurance policies from the 1st of April 2023, if the premium paid in a year, the aggregate premium is over 5 lakh rupees, then there is going to be a tax on the income you are earning from that policy. Still plenty of grey on whether this is applicable to a single policy or all the policies you have clubbed together in a year, and we will await more clarity on some of these aspects.
Well, the government is hopeful that the switch from the old to the new tax regime will happen, but we will have to wait to see. But what we did see today for the stock markets was wild gyrations, very, very volatile, largely on account of the kind of rout that we continue to see in the Adani Group stocks. But speaking of the markets, this was the first time in the last 3 years that the stock markets have closed in the red. Let's wrap up the market action for you.
Very, very volatile day for the markets, and the Nifty, Bank Nifty, big swings. I mean, 600 points high to low on the Nifty, 2,500 points high to low on the Bank Nifty. Budgets tend to throw volatile and big moves, and this was, I mean, I think one of the bigger that we've seen over the last many years now. There was a respectable recovery, which leaves us in a decent kind of closing space, 50 or 60 points lower on the Nifty, and the Bank Nifty pulled up as well. Adani Complex sold off sharply. I mean, Adani Ports, the cash cow, the group, was down about 25% at one point. And that kind of led to a little bit of panic across the board. So you had Adani Enterprises, the FPO closed, that was down sharply. Ambuja Cements, Total Transmission, Adani Green. And this was where fear and panic really spread. It was showing up in PSU banks in a big way. Stocks down sharply, PNB, SBI, Canara Bank, etc. The budget was largely okay, except, of course, a few niggles for the life insurance industry. That meant large price moves on the downside. And the insurance stocks are on your screen. SBI Life, HDFC Life, of course, lost the most. LIC was down sharply as well. There were gainers. Market breadth was positive. Indian Hotels, Chola Finance, Dixon, Lemon Tree are some of the names which ended in the green. I think after such large moves, what you need is some stability and the market finding, its own feet and standing steady. There is, of course, the Fed decision later today. That's a big global macro event to which world markets will react, and we will also. But I think more than that, more than all of that now, the focus is on the market here itself, trying to, find some sort of degree of stability and the panicky situation we've had for the last many days perhaps being settled a little bit. Back to you.
Well, as Prashant was just pointing out, the rout in the Adani Group stocks deepened today. We saw over 2 lakh crore rupees being wiped out in market cap just today, and over 7.5 lakh crore rupees has been eroded since the Hindenburg report was released last week. In fact, let's go across now to my colleague Nimesh Shah. He's standing by to explain to us what really transpired, because we saw the FPO go through yesterday, but this rout that we saw in the Adani Group stocks today. Nimesh, what do you make of it?
Adani Group stocks were under tremendous pressure, especially in the second half, after some reports emerged that Switzerland-based investment banking company Credit Suisse has stopped accepting Adani's bonds as collateral to its private clients, and that was a main reason why we saw a big sell-off in most of the Adani Group stocks. In fact, Adani Enterprise, which just closed the FPO yesterday, was down 30% in today's trade. The likes of Adani Ports down 20%, Ambuja Cement was down 17-18%, and even ACC was down 8-odd%. So there was a massive selling in the Adani Group stocks. Actually, the sell-off in Adani Group stocks led to a big sell-off in the banking names as well. Remember, there is an exposure of Indian banks to that group, and hence most of the PSU banks got heavily sold into in today's trade. So all the PSU banks were down between 5 to 7%, 8% in today's trade, but the big cuts came in the Adani Group stocks, largely on the back of the report that Credit Suisse has now stopped accepting Adani's bonds as collateral for its private clients. Back to you.
I have to, of course, I'll come to the changes in the budget with regards to the insurance sector in just a bit. But I'm sure, you and others, your colleagues at LIC are also watching with some degree of worry what is happening in the stock markets, the fall we're seeing in the Adani Group stocks. Could you tell us what's the thinking at LIC?
Actually, you see, we have given our clarification. All our investments are as per our SOP, and we fully comply all the norms. So, Adani stock is one of the stocks, and we are a large player, and I don't think that will affect anything for LIC's total investment.
No, it will not. But I remember we put out a story, I think on Friday. This is last week Friday, that the total exposure to the group, equity exposure, was I think 56,000 crores at that point. This was as of I think Friday.
Within the norms, within our prudent norms, it is there.
Well, I did ask the DPAM Secretary Tuhin Kanta Pandey about the rout in the Adani Group stocks, largely because it impacts a stock like LIC. Here's his reaction. We'll take a break and return with more on India Budget Hour. DPAM Secretary, let me ask you this. Concerned about what we've seen in the market, especially today, a very, very volatile day, and specifically as far as LIC is concerned, taking a beating on account of what has been happening with the Adani Group. Is that of concern to you? Is that something that you're looking at?
No, I don't think we discussed any specific corporation in the overall situation. But as I said, the markets keep going up and down. I mean, nobody controls those markets, and people have perceptions, and things change. There's something about insurance which has come up in the budget, and that may have an impact and so on. But I think everything we have to look at what term you are looking at. So I don't think that we should be really looking at day-to-day business of markets.